Speaking of metals, one metal stock that's in focus for reasons beyond, of course, the business outlook is Mukund. We, of course, know of the block deals that took place, and we understand that one of the promoters, Mr. Rajesh Rai and his family, they are selling their remaining shareholding in the company, that's approximately 16.5%, to the Bajaj Group, and they're completely exiting the business. Neeraj Bajaj, the CMD of Mukund, is actually with us. Mr. Bajaj, thank you very much for joining in. So that's my first question to you. What's the thought process behind you taking over complete control of the company? And now the Bajaj shareholding is, I think, close to 73, 74%. Are you still looking to keep the company listed, or would you take it off?
No, at this moment, the plan is to continue keeping Mukund listed. And you're right, the Shah family has, which has been an association for 3 generations. So it's quite an emotional thing for both the families. But the transaction happened last Monday, as you said, on a block deal on the stock exchange. And it's happened very amicably with a lot of goodwill. And so now the Bajaj shareholding, you are right, would be about 74%. But if 3 generations worked closely, I think that is for any company, I think that was very rare with all our ups and downs. And so, and today we are leaders in the very specialized, niche of alloy steels and stainless steel long products. And it's been a good association, but now, of course, the business association gets separated, but very amicably done.
Okay. Mr. Bajaj, good morning. So that's one clarification. The other important issue is the restructuring exercise. If you could tell us what's the updated debt and what's the targeted reduction in FY22 and 23?
Okay, you see, one of the main reasons for Mukund going through troubled times was our very high debt. Now, 9 months back, our debt was about 3,100 crores. And just to give you an idea, we were paying on an average, say, an interest rate of about 13%. That gives you an annual interest cost of about 400 crores. Today, already in 9 months' time, the debt has come down to 1,500 crores. So it's halved. And in the next couple of months, it should go down to 1,200 crores. And now at 1,200 crores, our interest cost on an average is 8%. So you can see that from a 400 crores interest 9 months back at the run rate of 400 crores, now in a couple of months, we'll be at a run rate of 8% into 1,200 crores, that's about 100 crores. So a reduction of 300 crores, which for a company of the size of Mukund is so massive. And that's what has really was keeping us back. And now that the whole company, that's why it's been a huge turnaround. And we are very, very happy that in a pandemic period, also this whole huge turnaround has taken place. And of course, our alloy steel, stainless steel, all order books are full. So that's why we look forward with great expectations.
If we can put up the charts on revenue for Mukund, we should do that, because what's happened is that through FY17 to FY21, the company's revenue went up and it's now come back to the same level at FY17. We're talking about 2,700 crores at the top line level. Yeah, those are the charts. So, this is the trajectory because of the debt issues perhaps that Mr. Bajaj mentioned. So, Mr. Bajaj, what's going to be the focus? How are you going to drive revenue? Can we expect a big jump in FY22? And you mentioned the debt reduction. So, at the end of this year, what would your gearing be? What would the debt equity ratio be?
So, the debt equity would be maybe less than 1 to 1, because we expect the total debt to be in the region of 1,000 to 1,100 crores from the level of 3,100 crores. So that way, the whole situation is so dramatically changed. And you are absolutely right. Our turnover top line was about 2,700 crores last year. Current year, we expect the top line to be in the region of 4,000 crores. And this is basically happening because literally from this month itself, and really more, it will happen from next month, is our stainless steel production will go up by about 50%, from say 8,000 tons a month to about 12,000 tons a month. The order books are full. Our constraint was a rolling. We could make the stainless steel. We could sell it, but in between we had a rolling constraint. That rolling constraint, because of a new mill commissioned at Hospet, the rolling constraint has gone. And that's why literally from, as I said, from this month or next month, the stainless steel production will increase by 50% or so, which translates annually into, say today it's about 1,500 crores, will go up to about 2,200 crores. So that will now start happening. And alloy steel at Hospet, that will go up by about 20%. Okay. And this is, and the good part here is that there's virtually no capital expenditure required for this expansion. So that is because we have, with now great difficulty, brought down our debt, and we don't want to, in a hurry, increase it again. So we are very conscious that our debt has to keep reducing, but we have to still, with productivity increases, with cost reductions, we have to keep improving our performance.
Mr. Bajaj, one last question. Any other non-core asset that you plan to sell, any parcel of land or anything else that you've been doing?
We had one parcel of land which was sold in the last financial year. That also helped to bring down the debt. And we have already signed an MOU for another parcel of land, about 45 acres at Kalwe, and that is public information that the MOU is signed at about 750 crores. And that we hope that it should all fructify and we get the money in maybe 2 to 3 months.
All right.
So that also, as I said, that will also help to reduce our debt and really reduce our interest costs.
Got it, Mr. Bajaj. Thanks a lot for joining us. That's Mukund, stock up about 2%. The pre-open has settled, by the way, 21 points higher on the Nifty. So not as big as the SGX Nifty. The Bank Nifty is a bit of an issue, up only about 19 points on that. Mitesh, if we open here, you trade the index, and what's your 9-10 call?
No, here I think I won't be looking at trading the index, but as I said, I think lighten up long positions closer to 16,340, 350 zone. That's the idea, in case we get it, or if you get a decline below 16,180 levels or around that level, maybe approach along with the 40-point stop. My 9-10 call would be Pidilite. I think that's a buy with a stop at 22.39 for a target of 23.10.
What are you going with for 9-10?
Yeah, I would like to go with Cummins, and the reason is because the stock was consolidating between the range of some 920, 930 on the higher side and 820, 830 on the downside. But eventually, the stock has broken this level in last 2 days, and it is holding above the important level. Now the event is over of result. I think the stock should move towards the levels of 1,020 or 1,050. So we should look for adding Cummins even at current levels with a stop loss at 920.
Okay, fair enough. Let's do one thing now. Let's revisit some of the more important stocks to keep an eye on, some of the stocks which could be stocks of the day. Let me start with Ekta on Lupin and Cadila. Ekta?
Well, you know, Anuj, a couple of stats for Lupin and Cadila. I'll start with Lupin. The stock, remember, was down 6% yesterday. It's corrected around 17% from its 52-week high. The EPS range is very wide for FY23. Consensus is at around 46 to 48, trading at around 21 to 22 times FY23 PE. Now, the street is going to watch for an improvement in margins for Lupin going forward. US markets reaching back to that critical mark of around $200 million, resolution of US FTA issues, and a possible strategic investor in the oncology arm. For Cadila, the stock was down 2.6% post numbers yesterday. It's corrected around 16% from its 52-week high as well, trading at around 24 times 1 year forward as compared to, say, the peak of around 28 times. Street is going to watch for single-digit growth in the US, the possibility of getting approval for Zycov-D, the vaccine, in the next 1 to 2 weeks. Remember, CS says 30% of the market cap is being attributed to the COVID-19 vaccine, opportunity shrinking according to them.
Okay, all right. Thanks very much. We'll watch out for that. And then the unlock theme. So, Mangalam, what all are you keeping on your radar?
Well, it's three buckets. We have hospitality, we have shopping, and then we have the multiplexes. From the hospitality end of things, positive news coming in as restaurants are allowed to be open in Mumbai all the way up to, in Maharashtra, up till 10 p.m. for all days of the week. And we will see some positive news coming in for Jubilant Foodworks, specialty restaurants, barbecue nations, and the kind. Also, hotel stocks likely to do well as marriages are now allowed to do about 100 people per wedding in the indoors. Then we have the shopping malls where we will see some positive news coming in for Phoenix Mills, Trent, Shopper Stop, as they too can remain open till 10 p.m. on all days of the week. And finally, we have the multiplexes. While PVR, Inox Leisure may see some disappointment because they're not allowed to be open right now, but the street will bid ahead and anticipate that maybe a week or 2 weeks from now or whenever, sometime in the near future, they will be allowed to open. So maybe a dip on these stocks will not be as much.
Okay, Mangalam, thanks a lot for that. And Amisha, will thank you as well. Thanks a lot for staying on till the market opening. Appreciate your time and your views on individual stocks. Just about 30 seconds left for markets to open. Let's just revisit the